This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The OPEC said on Thursday data-based forecasts do not support the International Energy Agency's (IEA) projection that demand for fossil fuels would peak in 2030. IEA Executive Director Fatih Birol said in an op-ed in the Financial Times on Tuesday that new IEA estimates show this age of seemingly relentless growth is set to come to an end this decade, bringing with it significant implications for the global energy sector and the fight against climate change. OPEC, de facto led by top oil exporter Saudi Arabia, in its statement on Thursday said what made the projections so dangerous is they are often accompanied by calls to stop new oil and gas investments.
Oil rebounded on Thursday, with Brent crude topping $93 a barrel for the first time this year, as expectations of a tighter supply outlook for the rest of 2023 overshadowed concerns over weaker economic growth and rising U.S. inventories. Saudi Arabia and Russia's extension of oil output cuts will result in a market deficit through the fourth quarter, the International Energy Agency said on Wednesday before a bearish U.S. inventories report prompted a brief pullback in prices. That this genuinely bearish stock report only led to a brief temptation to sell speaks volumes and underlines the market mentality, said Thomas Varga of oil broker PVM.
Moving on to the top news in the energy sector.
The U.S. Energy Department has talked to oil producers and refiners to ensure stable fuel supplies at a time of rising gasoline prices, Jared Bernstein, head of the White House Council of Economic Advisers, said on Wednesday. Rising gasoline prices were largely behind the largest increase in U.S. consumer prices in 14 months in August. The Energy Department is in touch with producers and refiners to resolve any issues and to try to ensure stable supply, Bernstein told reporters on Wednesday.
Appetite for Iranian crude is growing in China, the world's biggest oil importer, after the extension of supply cuts by Saudi Arabia and Russia boosted global prices, while Tehran is stepping up output and exports despite U.S. sanctions. Although China's teapots, or small independent refiners, are stocking up on Iran's discounted oil as they exploit robust margins to fill strong seasonal demand, big state refiners are still keeping away. Iran's crude exports of about 1.5 million barrels per day, BPD, stand at their highest in more than 4 years, with more than 80% shipped to China, data from consultancies FGE and Vortexa shows. Next, we have the top news in metal markets. The Shanghai Futures Exchange, SHFE, is looking into the possible launch of nickel futures for international use, a potential challenge to the London Metal Exchange's LME contract. 5 sources with knowledge of the matter told Reuters. One of the sources said SHFE has been studying the structure of the nickel market and supply and demand at the instigation of industry participants looking for alternatives. LME prices have been used as a global benchmark by commodity traders, producers and consumers using nickel to manufacture stainless steel and, more recently, electric vehicle batteries.
Copper prices rose on Thursday as China's measures to support economic recovery helped to alleviate price pressure from high inventories and a stronger dollar while the market awaits key Chinese indicators. 3-month copper on the London Metal Exchange, LME, was up 0.2% at $8,437.05 per metric ton by 14:48 GMT after touching a 1-week high of $8,491. Demand for copper, used in power and construction, has been muted this year by a patchy post-COVID economic recovery in top metals consumer China, while a relatively strong U.S. currency makes dollar-priced commodities more expensive for buyers using other currencies.
We will now look at the top news in the agricultural sector.
Consultancy Strategie Grains has made a sharp cut to its forecast for European Union's soft wheat exports, citing a sluggish start to the season because wheat from EU origins is proving uncompetitive against Russian wheat. In its monthly report, the consultancy said it now expects EU soft wheat exports to reach 30.1 million metric tons this season, down 700,000 tons from its August forecast and well below 2022-23 exports revised upwards to 32.3 million tons. The prices of EU wheat origins will need to fall closer to the Russian wheat price before any significant surge in EU exports could be expected, Strategie Grains said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.